everyone, welcome back to CryptoCache. Thank you so much again for joining me here. Happy Blood Red Friday. How many times have we had this conversation? It seems like a rinse and repeat situation here. Also, very, very common, unfortunately more so lately than usual, but we do see a significant fake little pump there with some good fundamental catalyst, and the price just instantly dumps afterwards. Very, very standard, crypto trading 101 stuff right there. And I say that more so because of how the market has been, not necessarily like that's something we should have expected, right? Nobody truly expected the price to dump this hard at this exact moment. So what we want to do here, now that with the price is pulling back, instead of keep drawing out new fib levels to try to see where the bottom is, you really just want to zoom out and essentially find the more local low and local high and kind of go with our more macro fibs. If I recall correctly from before, this should be our 0.618 fib level. So we are entering that golden pocket. We really got to hope that this holds here for us. Okay, so taking a look, we're right there at the lower range of that 0.65. If we don't hold that level here today, I think we could very well see some further downside. This level I have right here at about 53.9, that is a daily candlestick closure here. That's basically our lowest daily candlestick close since we've been in this range here, okay? So our absolute lowest close is roughly 54,000. And our highest daily candlestick close is roughly 73,000. So we've been kind of range bound in that area, if you will, with a slightly descending type of pattern this whole time. So if we look at this right now, closing above 54K today is extremely important to ensure we don't technically lose that daily candlestick close. Granted, this was super manipulative market there. That candle wick is a different story. Candle wicks happen, but candlestick closes are more so what you want to focus on when it comes to macro and or daily time frames. So let's go ahead and take a look here. Reload our Bitcoin charts to kind of see what's going on. Future reference, I do appreciate you hitting the like button, commenting below if you get a chance. Everyone that has been doing that every video, absolutely appreciate it. We got to get this in front of more people so people stop getting destroyed. And it's funny, some people might be rolling their eyes too because I put a double bottom potential pattern from yesterday. You got to recognize those playout charts that I send are simply just kind of giving you a perspective of better and worst case scenarios, right? So a lot of times I'll put different views in there to kind of help you kind of think. But at this point, again, if you've been watching my videos this week, you'll recognize we've been expecting the price to pull back, albeit didn't expect this to happen, a perfect rejection off 57K to sweep that lower 54 range. Didn't really see that one happening this quick. I'll be honest, the market continues to surprise me. Okay, so take a look here. We can see 54,000, more so importantly, 52 to 53K. With some late long leverage trades there. Those are low leverage trades probably, but some people with a safe stop loss in the 52K range. We zoom out and also in, we can see here this area. We've been talking about this for a little while. 54 to 53,000 is probably that next area of liquidation that could very well get swept. We saw 4, 6, 10, 7 billion in liquidation just swept. So millions of dollars gone, billions of dollars gone. It's all absolutely destroyed in that sense. And moving forward, we can see here, of course, that 54 to 53K, loosely, more so 53.5 to 54,000 is that heaviest concentration here in the near future. And once that's all said and done, there's a very slim possibility we see 48K. And if so, there's obviously a lot down there too. But I think that's a ways away. Hoping so. Anyways, I got my limit order set as low as 48 personally, so I'm fine by that. But once again, everyone has different strategies with their spot bags. So let's take a look at the daily time frame, work our way down. Kind of recognize, again, just to clarify, daily candlestick close at 54,000. I'm rounding up a little bit. That is roughly what we need to see today in order to have any legs to stand on. So in a perfect world, the price comes down to 54K, bottoms out there, we all go long and the price goes back up. It's hypothetically what should happen the way that just how jagged the market has been, but just know that that is the key level support that we have here potentially for us. We can see here, of course, money flow index extremely low. Once it gets closer to 20, that's usually a bouncing point though. On average, if you see the MFI come anywhere close to 20, we will naturally see that recovery. It's never truly a phenomenal recovery, while this one was a pretty significant one. The sustainability is another question, but the key takeaway here is that getting closer to 30 on the RSI and 20 on the MFI, that's usually a good combination for buying the dip. Either way you look at it, still absolutely diverging. This this descending type of pattern that we're having here continues to go lower. So it's really hard to kind of rely on the support and resistance levels when it does this kind of behavior, right? So just be careful with the trades you take. We can see our TSI, that's a trend strength index, a newer indicator I kind of like using. It is kind of telling us here specifically that we're reaching our bottom. Doesn't mean we're going to pivot or bounce. It just implies that we're at this extremely low rate. low area there. And if and when we get a convergence to the MACD, that's maybe when you want to consider taking a trade. It's pretty good about giving us indications on momentous strength. And at this point, the momentum is down. There's no other way around it, okay? So daily time frame is looking bearish. No surprise there. 4-hour time frame here. We got this perfect little wick up to the 20-day SMA. For the most part, it's been basically giving us a ton of false positives. As soon as you get above the 20-day SMA, price rakes down. As soon as you come here to test it, we get a bull pennant pattern, price rakes down again, and I'm sure there's some late longs at about 57,000 that are feeling pretty terrible right now. Okay, it's just kind of the way that it goes. So you cannot fight against the grain. I'd say minus a couple of outliers. There's very few coins right now performing well. You're generally going to find more benefit going down than up, and it's hard to want to short the bottom because it does feel like the bottom's in, but again, that's a tentative bottom, and it doesn't last very long. So once more, the amount of volume we're seeing right here is extremely high, and this just implies we got a lot of selling pressure. And the last time we saw this kind of volume, it was the start of a downtrend here back in August 14th, and we also saw this kind of volume when we were bottoming out, so to speak. Again, significant bunny ears on that one back in August 3rd and 4th when the price was at its lowest point, wicked all the way down to 49K. All right, so that's kind of where we're at there. Let's quickly zoom in to the 4-hour time frame here, just kind of reflect here and just talk about these scenarios that are all bearish. We got a second stochastic swing to the downside. We can see RSI, MFI right there at 30. TSI super low, MACD is super low. There's really nothing here telling us that you want to buy this dip. In fact, we're hitting that tentative support level at about 54K right now. And if we don't close at that level or higher today, it could very well imply we see the price continue to run. If we take a look at the hourly, we can recognize here as well that there's absolutely zero reasons to consider a trade. Everything is basically telling us the bears have control. The point of control for today so far, by the way, is 55,700. That's pretty high up, honestly, compared to where the price is right now. It doesn't mean it's going to bounce and recover to that level. It just implies that's where the most amount of volume is here today. And that implies that the bears have control anywhere below that. Okay, so I would not trust a long position right now. Buying the dip just to try to buy the dip is a very scary thing. People probably said that at 55,000. Now they're saying at 54,000. They're going to keep buying lower and feeding the bears. So it makes no sense. Don't feed the bears, right? They're just going to keep coming right back. That's all there is to it. Again, pay attention to liquidation, folks. Here. Now we are at this lower level. Let's go ahead and refresh. Oops, wrong button there. See what's going on. We can see here another statistical probability there, right? See it all there between 53.5 and 54K. So wouldn't be surprised if we see another candle wick down to 53.5. All right, folks, try not to catch a falling knife, okay? It's not worth it. Just wait for the bottom. We'll see here soon when that bottom is. Keep in mind, when we have red days moving into weekends, lately with the market, we've seen redder weekends, okay? So just be mindful. This may not be a pretty weekend. I hope this made sense. I described this correctly either way you look at it. Thanks again so much for watching. Look forward to working with you. Have yourself a great rest of your day.